Hello, welcome to European Open Briefing for Thursday, June the 7th. I'm Rafi Boyadjian, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. So the euro continues to march higher. It's now reached a 3-week high against the dollar. So this comes after hawkish remarks by several ECB policymakers yesterday, which fuels speculation that the ECB will announce an exit date to its stimulus program at its policy meeting next week. The dollar, though, is struggling against the Japanese yen. It's fallen slightly after failing to break above the 110 level. The pound is following the euro higher. It's moving past the 1.34 level despite some Brexit intentions within the UK government. The Australian dollar has come off its 6-week highs. The loonie is mostly flat, but the Kiwi is another currency that's gaining against the US dollar. So let's get started first with the euro. We can see here in the chart the single currency just hit a 3-week high of 1.1838 against the dollar, currently slightly off those highs at 1.1825. So yesterday we had several hawkish remarks by ECB policymakers, and that was the last remarks we're going to hear until the policy meeting next Thursday as the blackout period begins for the ECB. So the central bank's chief economist Peter Praet strongly hinted yesterday that the governing council will make a decision on when to end their asset purchase program. We also heard the German central bank head Jens Weidmann saying that market expectations that the QE will end by the end of 2018 are plausible, and we also heard from the Estonian and Dutch central bank heads as well, who are also on the same page. So the Eurozone government bond yields surged higher after those remarks, but we can see that the concerns about Italy haven't completely disappeared yet, as Italy is one of the most vulnerable nations in terms of the ECB ending their asset purchase program due to Italy's high debt levels. We saw, although German yields did rise from those remarks, the Italian yields rose even higher, widening the spread. So there's still some risks there about the fate of Italy, given the new government's spending plans. Let's now have a look at the US dollar. We can see dollar yen yesterday hit a 2-week high of 110.26, but hit a wall there. It's later retreated to around the 110 level. It's currently trading around 109.90. Dollar index, we can see there sliding downwards, falling to 3-week low. That's mainly on the back of a stronger euro and the pound. So the main focus now is the G7 summit that begins tomorrow in Canada. We're not expecting much progress in terms of world leaders resolving their differences over trade. If we do see absolutely no progress, and as a result we see more counter-retaliatory measures that could potentially lead to a stronger Japanese yen, and we could see dollar yen giving up some of its recent gains. We did have a lot of trade data yesterday, including the US. The US trade deficit fell to 7-month low, so perhaps that is some good news for other world leaders when they meet President Trump at the G7 summit, as President Trump would have slightly less a case in terms of justifying his actions due to the large US trade deficit. Let's now have a quick look at the UK pound. We can see sterling hit a 2-week high 1.3471 a short while ago. So the pound has been on a more positive footing following the PMI readings for May. Both, actually all three, manufacturing, construction and services PMIs beat expectations. But the pound also is gaining on the back of a stronger euro. We do have a lot of Brexit uncertainty, though. The UK government has still not made up its mind about a solution to the Northern Irish border and what kind of a customs partnership it wants with the EU after Brexit. There is also some talk in the markets that Brexit Secretary David Davis could resign due to major differences with Prime Minister Theresa May's policies on Brexit. But that doesn't seem to be unnerving for Forex markets at the moment. As the pound is getting on the back of expectations that the Bank of England could raise interest rates as early as August if UK data continues to surprise on the upside. And finally, let's have a look at the commodity-linked currencies. We can see the Australian dollar slightly off those 6-week highs yesterday when it reached 0.76 against the US dollar. That was on the back of stronger than expected GDP readings for the first quarter for Australia. This morning, though, we had slightly disappointing trade data for April. Exports out of Australia fell by 2.2% in April, and we're seeing a slightly softer Aussie this morning at around 0.7650. The Kiwi, though, is holding on to its highs. Yesterday, it reached the 5-week high of 0.7059. So the Kiwi is mainly benefiting from that broad positive risk sentiment that we've had for much of this week. If you have a look at the Canadian dollar, though, it's much more volatile there in comparison to the Aussie and the Kiwi, and despite that volatility, it remains range bound. We can see the loonie yesterday firming to 1.2855 to the US dollar following trade numbers out of Canada, which showed a much smaller than expected deficit for April. We saw Canadian exports hitting a record high despite uncertainty about the future of NAFTA. And a quick look at today's economic calendar. It's going to be fairly quiet for the rest of the day, but we will have a press conference by Bank of Canada Governor on the Bank of Canada's financial stability review at 15:15 GMT. That's it from me. Thank you very much for watching and have a great day.